Are you wondering what credit score you actually need to buy a house?
Or maybe you've heard you need a perfect score, and now you think homeownership is out of reach.
The truth is, you may not need as high of a credit score as you think, but your score can make a huge difference in your monthly payment and your rate.
So if you're new here, I'm Kelly Mates.
And I'm Jill Jackson.
And we are with the Colorado Homes and Living team.
Whether you're looking to buy in 10 days, 10 weeks, or 10 months, it's never too soon to start the conversation.
We are local realtors to the Denver metro area, and on this channel, we talk about the ins and outs of Colorado and navigating the real estate market.
So let's get into it. What credit score do you need to buy a house, and how does that affect your loan?
First things first is there is not one magic credit score that applies to all buyers. Different loan programs have different requirements.
Here's a general breakdown. With a conventional loan, lenders typically want to see a 620 credit score or higher. FHA loans are a little bit more flexible, and lenders often want to see a 580 credit score or higher. A VA loan, which is eligible for veterans and military, we have seen buyers get loans with credit scores as low as 550. USDA loans, which is the United States Department of Agriculture, and typically are rural type loans, are also very flexible, and we've seen people get qualified with USDA loans with scores as low as 580.
And here's something important. Just because you qualify with a certain score doesn't mean it's the best financial move. That's because your credit score impacts more than just your approval, it affects your interest rate.
This is where many buyers get surprised. Your credit score doesn't just determine whether or not you can buy. It can influence how expensive your monthly payment can be over time. Generally speaking, a higher score equals a lower interest rate. A lower credit score equals a higher interest rate.
And even a small difference in rate can have a major impact on your monthly payment. Here are a few things to consider when it comes to your credit score. Excellent credit for a mortgage is considered above 740. An average credit score for mortgage is considered 620 to 700. And anything below a 620 is considered a lower credit score. So consider a buyer with a stronger credit score will receive a lower rate, which means a lower monthly payment, less paid in interest, and more purchasing power.
So when people ask, can I buy with my credit score? Sometimes the better question is, should I buy now, or should I increase my credit score first and save money long term?
A lot of people think that credit scores are very mysterious, but they're really based on a few key factors. Here are some of the biggest ones. Payment history, which means paying your bills on time, and late payments can affect your score. Your credit utilization, this means how much available credit you have and what you are utilizing. Maxed out credit cards can hurt your score. You shouldn't be going over 30% of your utilization. Also, your length of credit history. Older accounts can help you build stability. If you have new credit inquiries, opening multiple accounts at once may temporarily affect your score. And you need to have a good credit mix. Having different types of credit can sometimes help.
And this is important. Don't make major financial decisions without speaking to your lender first. We've seen buyers accidentally hurt their financial situation by opening new accounts or making large purchases right before closing.
So let's bust a few myths. Myth number 1, you need perfect credit. Nope, you do not need an 800 credit score to buy a home. Many buyers qualify with average credit. Myth number 2 is that you should pay off all of your credit cards and close them. Not always. Paying off credit cards and closing accounts can sometimes impact your score in a negative way. Myth number 3, one credit score fits all. The score you see online may not be identical to all lenders.
That's why getting professional guidance early truly does matter.
If your credit isn't where you want it to be, don't panic. There may still be a path forward. Sometimes small adjustments can make a meaningful difference. That might include paying down revolving debt, correcting reporting errors, avoiding new debt, and creating a plan with your lender.
And honestly, most buyers are closer than they think. That's why we say it's never too early to start the conversation, even if you're months away from buying.
If you're thinking about buying in Colorado and what your credit score may mean for your options, reach out.
We work with buyers at every stage, including first-time home buyers and self-employed buyers. And we'd be happy to help you create a game plan.
Drop your questions in the comments below. What credit score questions do you have?
And if you found this video helpful, please like and subscribe to our YouTube channel so you don't miss any future updates or videos about living in Colorado and navigating the real estate market. Again, I'm Jill Jackson.
And I'm Kelly Mates.
And we're with Colorado Homes and Living team. And thanks again for tuning in. We'll see you on the next video.
Take care.